Hi, good afternoon, everyone. It's Tom Shave here speaking, one of Momenta Finance's Director of Sales. Firstly, thanks for joining this webinar session that we're hosting this afternoon. Before we start, I'd just like to run through a few housekeeping items, if I may. For the purpose of this webinar, we've put everyone on mute, and we want to help answer your questions you may have regarding the products and criteria. One request is that it's not a forum for individual cases, but we can certainly pick that up after with relevant BDMs. So if you do have any questions during the presentation, just please feel free to pop them in the chat, which you can find in the menu bar. In the live Q&A at the end of the session, we'll pick up any questions that have been submitted throughout the presentation. And also we will circulate the Q&As after the presentation, along with a recording of this presentation as well. If you do have any issues with the sound or screen share, just please put that in the Q&A chat as well, and we'll look to resolve that as quickly as possible for you. So joining me on today's session, I'm pleased to introduce Jeremy Crinnell, who is also our Director of Sales, who some of you may recognise from days gone by. He joined us at the beginning of this month, and we're very pleased to have him on board to help move us forward in the introducer space. And in addition, I have the pleasure of including Luke Smith, who's our senior credit underwriter there on the right-hand side. Great. So before we dive into the heart of the presentation, let's take a quick look at what we'll cover over the next 45 minutes or so. So we'll touch on the economic forecasts, providing a view on the landscape for how SMEs are impacted at the moment. Third segment dives into business loans. We'll cover both secured and unsecured loan options, eligibility criteria, alongside the application requirements to help basically get a win for your customer. And then we'll, of course, discuss our property loan offering and insights into how Momenta Finance can assist you in your property ventures. And then finally, we'll wrap up with a credit risk appetite from Luke and how we calculate things like affordability, giving you the best view on our credit appetite and procedures, etc. So throughout this presentation, like I mentioned before, we really recommend that you ask questions via the chat feature, and we'll address as many of those as we can during the Q&A session at the end. So if I'd just hand over to Jeremy, he's going to talk us through this slide next.
Thanks. Good afternoon, everyone. I'm Jeremy Crinnell. Thank you very much for giving us your time and joining us this afternoon. So I'm going to look at who we are at Momenta Finance. We have a rich history dating back to 2013, when we were previously known as Merchant Money. Over the years, we've evolved and grown to better serve the needs of brokers and SMEs. And in a recent significant development, we underwent a rebranding journey, transitioning from Merchant Money to the brand you see today, Momenta Finance. We are headquartered in London, strategically located at the heart of a global financial hub. And from here, we connect across the UK with SMEs and brokers to help provide valuable financial solutions. We take pride in our broker-centric distribution model. Our network of dedicated brokers plays a crucial role in delivering personalised financial services that are tailored to the specific needs of the SME market. In terms of financial strength, Momenta Finance has successfully raised over 115 million in capital, thanks to the support of esteemed partners like Quillam Capital and Barclays Bank. And our commitment to excellence has translated into consistent year-on-year growth. We've steadily expanded our offerings and our reach to better serve your clients. In the first half of this year, we've achieved remarkable growth. Business and property loans have surged, showing an impressive increase of 25% and 75% respectively. This underlines our dedication to fueling your SME clients' growth. So Momenta Finance can be a game changer for your SME clients. We offer a range of services that are designed to make the process smooth and efficient. But first and foremost, we've developed our introducer portal, a hub of convenience and efficiency for you and your clients. One of the standout features of our portal is the speedy feedback it provides. Our decision engine offers faster responses without compromising the quality of our service. And coupled with our dedicated credit team that work tirelessly to assess applications from different angles, we hope to ensure a comprehensive evaluation of all of your clients. Additionally, brokers have the access to indicative pricing. This valuable information empowers you to better serve your clients by providing them with a clearer understanding of their overall financial options. And to ensure transparency throughout the process, our portal offers real-time notifications. Automated email updates keep yourself as brokers informed about the progress of deals, so you're always in the loop and in control. Flexibility overall is key, and our introducer portal caters to diverse client preferences. It allows the use of open banking for seamless submission of banking data, but of course, additionally, PDF uploads of bank statements are also still supported, giving your clients the options that they need. If you're not already using the portal, we would encourage you to speak with your BDM today, and we'll definitely help you to get set up. Our commitment to your client goes beyond convenience. We offer bespoke funding solutions. Our underwriters meticulously review applications alongside the decision engine to ensure that your clients receive offers tailored to their specific situations. And when it comes to speed, we really feel that we mean business. We're proud to have successfully funded unsecured loans within as little as 4 days of application and secured loans within just 8 days of application. And we pay your invoices promptly thereafter. Now that you have a brief snapshot of who we are and our recent achievements, let's explore the current economic market and just how we're going to assist you and your clients throughout these times.
Thanks, Jeremy. So I guess, as I mentioned in the content section, I thought we'd give a view on the current economic forecast to basically understand what's potentially impacting SMEs at the moment. And there's clearly recession fears building, the credit growth is contracting, the media is reporting house prices are down, and there's financial market volatility along with geopolitical events that are happening across the world at the moment. There's clearly mixed news on inflation. The headline rate is it's down. Figures published yesterday reported that. It fell from 6.7% in August to 6.8% in July, which basically means overall prices are still rising, but the rate of increase is falling. And I think economists had expected the figure to increase as fuel prices rose by circa 5p a litre in a month. So core inflation, I guess, which excludes energy, food, alcohol, and tobacco, also fell to 6.2%, with wage growth still between 6 and 8% per annum, which I guess is above the Bank of England target of 2%. So demand and supply imbalance is being caused by Brexit as well. But I guess from today's news that were announced at 12 o'clock today with the Bank of England leaving interest rates unchanged in I guess you could argue, a surprising move for many of us, as rates had been expected to increase from 5.25 to 5.5, is perhaps an indication that things are cooling down. And maybe the better than expected inflation data may have changed their thinking at the Bank of England. And then, of course, we've got the autumn budget coming up. Unlikely to be any fiscal handouts, probably, given what we saw from last year's calamity. So I think any stimulus risks undermine the Bank of England inflation policy, but I guess we'll watch this space on that one. And I guess with the bank lending overall, it is down. We know this, and I think it provides an opportunity for the likes of yourselves and alternative lenders such as Momenta to help support SMEs navigate through the uncertainty over the last 18 months that have been brought forward. And then finally, I guess the reduction in heavily incentivized government schemes, and I think SMEs are looking at ways to grow and restructure their capital needs. And I'm sure you guys can certainly help with that. So I guess in a nutshell, what does this mean? I suppose it's like lots of uncertainty, which equals risk. There's some divergence between sectors. There's some divergence between consumer and business borrowers. And I think SMEs are significantly adversely affected by their cost of debt, given the high costs associated with it and the inability to refinance onto cheaper finance facilities. So overall, I know the picture sounds bleak, but I think we are looking at a change at the moment, and hopefully we can help support that. So with that in mind, I'm just going to hand over to Jeremy to talk through our product set.
Thanks, Tom. So how can we support your clients and help SMEs to gain access to the right finance for them? Well, it's important for you as our brokers to understand which type of businesses that we can support. And as you can see on this slide, we will support businesses that are UK based across England, Wales, Scotland and Northern Ireland. The businesses that we support must be turning over a minimum of 350k per annum and have at least 1 year's filed financial accounts. We're currently not accepting applications for non-homeowners, but that's something that we will obviously advise you of as it moves forward and changes. With regards to the persons of significant control, we do require one of them within the business to be a homeowner. And that's something that if you need to discuss with your BDM, the case before submitting, we're happy to do so and help you understand who that person needs to be for that application. With regards to applications of over 250k, we're going to go through in a second that we are able to offer security and an unsecured facility for those applications under £250,000. We do lend to limited companies and LLPs, but one of the LLP partners must be registered as a limited company if they want to kind of borrow from Momenta. We also ask that there is no CCJs and that the record, the current kind of financial record and credit searches are completely clear. If there is anything in the background or anything recent that is an issue, again, we do advise you to speak with your BDM. And of course, the final thing, the business has to have been trading for at least 2 years to be successful within the credit underwriting process. So we're going to look at first at the unsecured loan, then onto the secured loan, and then into what exactly we require for those facilities to be applied for. We'll lend to a business anywhere from £50,000 up to £250,000 as an unsecured loan, with terms up to 60 months. One of the kind of important things in the market today, offering 5-year money for Momenta, has given us an advantage over other people in the market. Our rates will range from 7.5% to 18% plus SONIA. And of course, that is across both the unsecured and secured, as we'll see in a moment. Some of the benefits of our product include we're able to accept overpayments of up to 10% of the outstanding balance annually without incurring early settlement charges. And we're also able to offer up to 12 months as an interest-only period for all applicants. Speak to us about how this looks and structured for your own clients' applications. If we skip to the next slide. I'll now cover off the differences in the secured business loan. And as you can see, we offer upwards of 250k to 750k for a secured business loan, but we can lend from 50 also. Again, our terms start at 6 months up to 5 years, 60 months, and our rates vary from 7.5% to 18% plus SONIA. The difference being here that we obviously look to take a first or second charge as security on the business. These benefits still remain the same, and we're able to help businesses in England, Wales, Scotland and Northern Ireland for both secured and unsecured lending. So some of the purposes and reasons people come to us, as you can see on screen, are to refinance existing debt, to invest in staff or marketing, for an asset or machinery purchase, or to improve the short-term working capital of your firm. If you have any questions about a purpose that may well fit within Momenta, we also recommend speaking to your BDM. So what is it we need to see for an application? Well, now that you're all going to join the portal, the application forms are all very easily available for you via the portal themselves. Of course, once you've completed the application, we need an itemised breakdown of the loan purpose. The more detail here will help us with our credit application. If the funds are required for debt consolidation, it is recommended to include that debt schedule as well. Of course, you will normally gather and always gather the latest filed accounts of your clients, but for Momenta Finance, we also require you gather the latest management information, no older than 6 months old. Gathering this information at the very beginning will help us in terms of our speed through the portal and lower requests that come back to you for your application. We do work with open banking consent for those who are or have clients willing to do so. But of course, we understand that there may well be some questions around that. And for customers not willing or able to do so, we will still accept 3 months business bank statements. The latest 3 month statements of the business must be for all the business banks in the company name. And if there are 3 or more failed payments in those bank statements, it's more than likely going to be a credit decline. So again, I would recommend speaking to your BDM, as we can discuss this with one of our senior underwriting team to see if there is anything that we can help with.
Thank you, Jeremy. Alongside our unsecured and secured business loans, we do offer a couple of property products. The first one's on this slide here. So these are interest-only commercial mortgages, and I guess these are a powerful tool for those looking to invest or expand their commercial property portfolios. So if you have a client that's, say, owner-occupied, seeking to secure like an additional site, or a landlord looking to optimize their property investments, this product offers a tailored solution for you. You can see the headline details of the product on the first section of this slide. It is SONIA +7, so you're looking at rates that start from about 13 up, 12 to 13 up, and it is on a first charge basis. One thing I would say, it's not for the long term, but where the customer has a requirement to acquire the property or release equity quickly, this is something that you could offer to them with a view for an exit into a high street bank in the longer term. I guess we require a reduced amount of DD, and we can execute exceptionally quickly on this. So if your customer, and this can be for any kind of asset class as well, by the way. So if it's a pub or a warehouse or a shop, we're comfortable with that as long as the LTV doesn't go over 65%. So when it comes to these types of transactions, just like business loans, we would require a full set of financials, bank statements, management accounts, an application form completed online. And the only additional thing that we do require is a RICS valuation. So providing that's dated within the last 12 months, we can use an existing valuation. If they have it in addition in a separate name, we can get it retyped into our name, that's fine. And should the customer not have a valuation, we have a panel of surveyors that we can work with, or if you have a preference, providing they've got sufficient PI cover, we can look at using them. And that can be either on a desktop or a actual site visit valuation, depending on the asset type. But definitely something to keep in mind. Like I said, we can execute exceptionally quickly on this. We have relevant examples where we've done this. So please do speak to your BDMs regarding this product. In addition, and we are going to be running a separate session on this, and we will send out invites shortly. We do actually offer bridging and development finance, but we feel that this area needs a good session to discuss it, to make it clear what we're looking for, what's required. So keep your eyes peeled for an invite on that very shortly. Great. So without further ado, I'm just going to hand over to Luke Smith to talk about our credit appetite and what they look for when reviewing your applications. Thanks, Luke.
Thank you very much, Tom. We wish to remain a credible and flexible lending partner for years to come, to serve the needs of the SME market, who are traditionally underserved in the UK economy. We take a more manual, holistic approach to our credit appetite, and this is always with the intention of truly understanding the request and the financials provided. Ultimately, by taking this approach, we believe this helps better structure and tailor the facility for all parties. When we underwrite, we consider a number of factors, but two things which must be evidenced on every approved loan is affordability and an exit strategy. Affordability we will come to on later slides. However, it must be stressed that a company balance sheet matters to us. We know what we expect to see when we look at a business in any given sector. We don't expect to see huge fixed assets on the balance sheet of every company we assess. We do, however, look favourably upon those that have significant tangible assets. That's not cash or other liquid assets, but something with little substance that may help us recover in a collection scenario, such as line items in the fixed assets. We aren't rigid. We aren't bound by affordability as assessed in your client's latest filed accounts, nor by the results of any management accounts you provide as part of your application. We've got a suite of funding lines that can fund most business purposes and allow us to lend where other lenders may be restrictive. We look holistically the information provided, and are happy to assess any additional information you wish to supply. Qualitative data alongside the quantitative helps the underwriter understand the financial health of the applicant business and helps us build a case for approval that makes sense. A few examples are provided on screen, but this list is not exhaustive. Questions will be asked, but always with the intention of making an offer tailored to the specific application. If we are asking questions in relation to the application, then there's a likelihood that the deal would be approved upon receipt of the satisfactory information. We may decide upon final decision to take security using any range of security options, but this is always done in the spirit of making a transaction work in order to best fulfill the capital need of an applicant customer. In an effort to remain transparent, all decisions are outlined in a concise manner to either outline the decline reason, ask any pertinent questions pertaining to the applicant business, or when outlining an offer. We take a three-pronged approach to assessing a deal as outlined in the table when assessing affordability. Our default position is to use an adjusted EBITDA figure for a debt service coverage ratio or affordability calculation. Here we are looking to see if a business can generate sufficient cash to service the loan requested. We can and will add back one-off losses, costs, or expenses if it makes sense to do so. The diagrams on screen give some flavour of the types of considerations we assess after we have understood the base EBITDA calculation, but it must be stated that this list is not exhaustive. To assist when assessing growth stories, we have two additional ways to assess affordability. We can utilise the Cato data, bank data, or open banking data available to us by credit bureaus, the statements provided, or through our open banking partners. This helps to validate turnover and performance in the management accounts. We will also consider income from forecasts and projections or guaranteed future contracts where these are made available to us. It must be stressed that even though a loan is affordable under a metric, there still may be aspects within the application which may mean we may not proceed to an offer. The example on screen is our adjusted EBITDA affordability calculation. This is the calculation we will use predominantly when assessing an application. In this example, we have a company with a net profit of 60k. We then add back in interest, tax, depreciation, and amortization line items. This brings EBITDA figure to 100k. Post this EBITDA figure, we will consider items which factor into the free cash flow of the business. This example uses a litigation exceptional item, which would not usually be factored into the underlying affordability of the business. Should this exceptional item be added back onto the EBITDA figure, then we get increased affordability. As already outlined, giving the story surrounding these points, such as exceptional items, in this case litigation costs, from the outset will give our underwriting team a more detailed and nuanced understanding to better structure a deal. Our second affordability calculation relies on using information from bank statements, Cato, or open banking data. This calculation will take an average cash position assessed over a time period. In this example, it uses a 6-month time period. Once we have this average cash position, an assessment is made to see if there are inflationary items which may artificially bump up the underlying cash position. For example, direct loans, intercompany transactions, revolving credit facilities. The average calculation, once taking these items out, is used in this affordability metric. We also have a final methodology for assessing affordability, which can use a variety of different quantitative and qualitative data. Via this methodology, we rely upon a well-packaged application whereby forecasts are outlined and backed up with data to show how a term loan would be affordable. This is a more forward-looking approach, rather than relying on historical financial data, and works well with businesses demonstrating growth. It must be stressed these plans and forecasts need to be realistic and backed by some of the examples noted. Again, though, this list is not exhaustive and we welcome any kind of application which makes sense.
Thanks, Luke. So I guess just to summarise what Luke said here, when it comes to proposing an application for us, definitely be specific on the amount and the term required for the customer. We're not beholden to 6 1-year, 2-year, 3-year, 5-year terms. If they need a 30-month term or a 40-month term, we're absolutely fine with that. And I think, as we mentioned, giving us some detail around the loan purpose is super critical for us. Even if it's fairly high level, that they need 20,000 for marketing, 20,000 for recruitment, 20,000 for office furniture or stuff like that. We just so we understand the requirement, and if we can't get to the full amount, at least we could potentially offer something. I think then looking at that purpose as well, it's like, is there a growth story there? Do they need any additional funding on top of it? We're happy to syndicate debt with other lenders as well. We're made aware up front. There's always a potential where we could offer the full amount. If required, we might look to take security, but we can package something up that makes sense to the customer. We have the flexibility to offer interest-only periods as well. They're not granted on every offer, but if we understand the requirement up front, we may be able to structure something that's beneficial to the customer that not many people in the market offer. So that's something to consider. And I guess when it comes to proposing the application, as a minimum, we obviously require the full filed accounts. If the accounts are older than 6 months old, then we would need some MI, and then also the bank statements. Just something to note on the bank statements, and it could be the difference between a decline and approval is if they have a savings account or a reserve account or even foreign currency accounts, provide those as well up front. That could make a big difference to the application. Sometimes we see them and we can identify them, but sometimes we can't. So if you could request that, that'd be helpful. And then any additional information your customer provides, we will certainly look at, such as contracts, cash flow forecasts, anything that you feel would add some weight to the customer's application. If you collect assets and liability documents up front as part of your own DD, we'll look at those. We're not too hung up on the format of it, as long as it's got the information on there for us to review. And that goes the same for the MI. We're happy to accept it via on a spreadsheet or through accounting software. We're not too upset on how the MI comes through, as long as it's a P&L and a balance sheet. And we get asked this question quite a lot. What do we like to look at? And you can see the list on the screen here. I think bear in mind that this is a nice to have for us, definitely, but in some instances we can take a view. So if you do have something that you want to get some clarity on, then we can certainly look at that for you. We could even look at third-party PGs if it makes sense, for example. And if there is like a credit blip or an anomaly where some lenders might just automatically pick it out, we can certainly look at that. If there's a CCJ, for example, in the background, or is in the process of being cleared or set aside, we can take a view of that up front. So this is a nice to have for us, definitely, but I'd certainly encourage you to speak to the BDM team regarding individual cases, and we can look to help support them where possible and give you a quick yes or no. And finally, we just move to our Q&A session, but I think you look like quite a bunch. We haven't had any questions. But we did have a few questions from yesterday. So what we'll do is we'll circulate them accordingly on the updated email for people to review, and we'll come back to you on the email. But I just want to say thank you very much for taking the time to speak to us this afternoon. Here is the BDM team here at Momenta. We're a friendly bunch, so please do get in contact with us if you do have any requirements, and we're very much looking forward to working with you going forward. Thanks everyone for joining, and have a good rest of the week. Take care. Bye-bye.